So people have been asking, well, what's going on with interest rates?
Sure.
Should I refinance my house? Those type of things. And a lot of that interest rate is based upon the 10-year Treasury.
Yep.
And so just because the Fed took the overnight funds to zero doesn't mean your interest on your house is 1% or whatever. I think it actually on Friday when I saw the numbers, it was up from the Friday before, and nothing had changed other than the bond prices had changed. So I don't think there's going to be a lot of fluctuation, but I did write down some positives that people should be taking a look at, and it is refinancing, right? I mean, if you've got a banker that you trust or whatever, if you haven't looked at your mortgage lately and these interest rates are low, get in and take a look. Maybe you can get to a 15-year instead of a 30 and get that house
and
paid
again,
off.
maybe like a marker for that would be anything over 5% or anything over 6% or
yeah, I would
kind
think
of ballpark.
I think even if you're in that 4.5% range,
it's worth it
if you can get to a
the
15-year
refinance.
at 3% or something, yeah, you should be taking a look at it. So, and I know the bankers are really busy, but give them a call and get on their list and see if you haven't refinanced. I've already mentioned it, but if you haven't funded your IRA or Roth IRA, it's a great time to be doing that. Yep. Roth conversion. So think about this. Think of all of a sudden you're 55 years old and you got $100,000 in an IRA that you had from a previous 401k, and it's sitting there. Now the $100,000 is worth $70,000.
Yeah.
You can convert a piece of that or all of it into a Roth IRA, pay taxes at the 70, used to be at 100, pay taxes at the 70, and now when it goes back to 100 someday, tax-free forever. That's a Roth conversion. So there's some wins that you have in a market like this.
So let's take that apart, because that's a pretty heady thing for the person that hasn't really thought through that. Talk me through the scenario one more time. Maybe you have a regular job doing maybe let's say factory work for Mr. Jim in our scenario, right?
Yeah.
And he's got $100,000 that he saved up, and he wants to be able to draw out on this on retirement. So explain it from there.
Yeah, let's even boil it down further. Let's say he's got $10,000. Okay, that $10,000 is invested, let's say, with us, and it's all in stocks, and the $10,000 is now worth $7,000.
Okay.
He walks in and says, take the $10,000 and convert it to a Roth IRA today, but it's now worth $7,000. It's not worth $10,000. Okay. So he converts $7,000. $7,000 now hits his tax return this year. He pays tax on $7,000 of income because he took it out. But now all $7,000's in the same exact investment, but it's in a Roth tax-free. Someday, if we believe this market is coming back, it's going to be worth 10 again, or it's worth 15. All the growth that he gets on that investment is never taxed now, because he took advantage of converting it when it was at 7 versus converting it when it was at 10. So there's some advantages to do a Roth conversion today. You can fund 2020's IRA today. So a lot of people file their taxes in February and April, and they do come in and then they say, okay, I just filed my taxes, I'm going to do a $7,000 IRA contribution, and they do it for 2019, but it's really done today in 2019 and 2020. They should also be looking at doing their 2020 contribution right now too. You don't have to wait until you file your taxes. Okay. So if this market truly is on sale, why not do your 2019 IRA and your 2020 IRA contribution?
Kind of all at the same time. And so if somebody was to do that, why is that a big deal? Like if they did their contribution early, for somebody that doesn't really understand, explain that to me. Why is that a big deal if you contribute early versus if you did it at the end of the year?
So let's say that, let's say you're buying XYZ stock at $100 a share.
Yep.
Okay. Today, you can buy it at $70 a share. Okay. So when you put $1,000 in there, instead of buying 10 shares, you might be buying 12 or 13 shares because you're buying it at 70 and not at 100. So it's on sale if you think it's going to get back there someday.
Interesting. Yeah, that's kind of a crazy thing. Like people think about contributing. I get to the end of the year, write the check, right? And then it goes to, but you can time the contribution. Is basically what you're telling me. Is why don't you go ahead and time the contribution?
And we all do it. I mean, for 25 years of doing this business, it's interesting on how many people fund their IRAs after they do their tax returns. And sometimes there's legitimate excuses, like you've got to get to the end of the year, see what your income was, that kind of thing. But some people do Roth IRAs every year. You don't need to wait till the end of the year to do it. In fact, you have some growth along the way. But it's just, anyway, it's an opportune time to be able to put some money in the market.